European stocks rose in early trade on Thursday as investors welcomed the progress made in the US-EU talks in Washington a day earlier and sifted through more earnings reports. At 0925 BST, the benchmark Stoxx Europe 600 index was up 0.5% to 389.06. Germany's DAX was 1.4% higher at 12,752.19 and France's CAC 40 was 0.7% firmer at 5,465.01. The mood was lifted by news that the US-EU meeting in Washington yielded some progress as the US agreed on Wednesday to work towards lowering trade barriers with the EU. The two sides said they would work towards zero tariffs, zero non-tariff barriers and zero subsidies on non-auto goods. In addition, they agreed to up trade in services and agriculture, which include greater U.S. soybean exports to the EU. SpreadX analyst Connor Campbell said the face-off went better than anyone would have expected. While there isn't exactly much substance to what was announced, with the fact the relationship didn't worsen being more notable than the plans to negotiate, it was enough to lift the spirits of the previously fearful markets, he said. Investors were also eyeing the latest monetary policy announcement from the European Central Bank at 12:45 BST, followed by the press conference with Mario Draghi at 13:30 BST, with no change expected. CMC Markets analyst Michael Hewson said, "We are not expecting any surprises from today's ECB rate meeting coming as we do off the back of last month's decision to taper the asset purchase program by the end of this year." The Governing Council also is unlikely to shift on its desire to end the program, despite some concerns about weaker data, with the focus now on when the first rate hike is likely to arrive. Currently markets are pricing October 2019 as the likely date for any move, and while some policymakers might feel a little uncomfortable about the timing being this far out, some of the more recent data does suggest that the economy is starting to decelerate, which in turn would justify some caution on the part of the European Central Bank. Any sharpening of the language to a more hawkish tone would be unwelcome at a time when inflation has just returned to target, but still looks a little on the softish side. On the corporate front, Airbus rallied as the airplane maker said second quarter profit more than doubled, although it also trimmed its operating earnings outlook for the year. Roche advanced after the Swiss drug maker upped its earnings and sales guidance for the year as its first half sales and profits surpassed analysts' expectations. On the downside, Nokia slid as the telecom network equipment maker's quarterly earnings missed expectations, while Schneider Electric was weaker despite posting a 7% rise in first-half profit and lifting its fiscal year outlook. Daimler and AB InBev were also both lower following the release of their second quarter numbers. On the data front, the advanced GfK Consumer Sentiment Index for Germany slipped to 10.6 in August from 10.7 in July, coming in below the consensus 10.7. Pantheon macroeconomics economist Klaus Vistisen said, "The headline in this survey has been extraordinarily stable in the past 6 to 12 months, close to a cyclical high. Unfortunately, it is not very good leading indicator for spending, so we have to look at the details, which are released with a one-month lag." The July numbers in this report were on the soft side. The Business Expectations Index fell sharply, to 15.7 from 23.3 in June, possibly due to the country's early World Cup exit, though this is speculation. The index had begun to roll over already in June, following a string of strong gains. Elsewhere, the income expectations and willingness to buy gauges fell trivially by 0.1 points but continue to signal solid demand conditions. The willingness to save index increased significantly, reversing a decline in June, and inflation expectations fell slightly, although they have risen sharply this year in line with a jump in energy inflation.